Okay, that's one of the major risks under payables. Okay, other one.
Another risk can be the suppliers will no longer deliver the a product for us in the future.
Yeah. The other risk, you're not settling their bills, so the suppliers will not provide you with your products. They don't want to deal with you anymore, or they will delay the supply of the products. So we have reputational and we have some operational risks. Okay. What would be the recommendation? If we're talking simple English, simple terms, the recommendation would be that the payable department should abide by the payment terms to avoid any conflicts with the suppliers. Yeah, yes, I saw you unmuted yourself. Would you like to add anything?
To create a policy or to improve the existing policy.
Excellent, excellent, excellent. Type. That's the recommendation. What's the action plan? So the recommendation is what? Internal audit suggestion for correcting a condition and preventing reoccurrence of this condition. Okay, so I'm suggesting a corrective action. Okay, the recommendation should provide an efficient and effective way to address the gap identified between the condition, what should be, and the criteria, between the condition, what is done, and the criteria, which is what should be. Okay, what's the action plan? These are the action plan. They are the steps that will take to address the gap. Okay, they are action steps designed to remediate the identified findings and to drive continuous improvement. For example, if we're talking about the same example, the action plan would be what? First of all, update the policies and procedures that I mentioned. That's one. Two, maybe extract the aging report in advance so that no payments will be paid after the credit period. Okay. Three, maybe automate. If we are still using manual, we are preparing the payable as a hard copy and then sending it to the payable guy is preparing the hard copy and then sending it to the chief accountant to approve it. Maybe we can automate, make like an interface on the system where the chief accountant can see the payables with all the scanned copies of the invoice and the check and then approve it online. That's another fast track thing if it's doable. So these are action items. But remember, in the action plan, the most important thing, there are two important things. One, accountability. Who should implement this action plan? Who should take action? Okay, and believe me, in my audit discussions, one of the toughest topics that we address is what? Accountability. It's not my, the stakeholder will say, it's specifically if you have interacting departments, they will tell you it's not my job, it's the other department job, let them do it. So accountability, who is responsible to remediate this action or take this action? The two is what? Time. You cannot leave it open-ended. There should be time, and usually the time is related to what? To the rating of the issue or to the rating of the finding. For example, if it's critical, it should be 1 month. High, 3 months. I'm just giving you numbers. It can be 1 month or 15 days, 1 month, 2 months. But the higher the issue, the lower the time. Okay, think of it in this type. Conclusion, which is what? Like the cherry on top in your audit report. It is the internal audit professional judgment about the engagement findings, but collective, viewed collective. You will have so many issues. And if you want to take it a step more further, there is a methodology. For example, if we have one critical issue, the report will be ineffective. If we have one high issue and 3 medium rated issue, for example, it will be generally effective. If we have 2 high-rated issues, it will be needs improvement. For example, yeah, I'm just giving you like a matrix so that you can allocate whether you have high-rated issue or lower-rated issue. Okay. When issued as a report, the final communication may include the following. May include. Okay. The above are the necessary, but the below are additional requirements. The title, which is the head of the audit, the title of the audit engagement, some background info, and the distribution list, which is to whom should the audit be distributed. It's like look of it as a PowerPoint. You will have the cover page which has the title and some of the objective, the scope, and some narrative, some background, and then you will have the recommendations and the actions item, and then the conclusion, and then the distribution list. Okay. Clear or not clear?
Yes, clear.
Excellent. Thank you, Aya. Your contribution is highly appreciated, and also the remaining aides. Engagements, final communication. We're still in the final communication, but in here we're talking about what? Additional components for assurance engagements. First of all, what's an assurance engagement? Inas, what's an assurance engagement? You're still with me?
Yeah, I'm with you, but I don't know. Sorry.
No, but it's okay. It's totally okay. It's my job to explain it to you. The internal audit departments, we explained that there are 2 characteristics of the internal auditors, independent and objective, right? Type. What are the 2 missions, the 2 assignments that the internal auditor do? 1, assurance engagement. Think of it that I'm giving assurance. Assurance on what? That policies, procedures, regulations are properly implemented by management, and I'm doing the assurance engagement to check this. The other one is the consulting engagement or the advisory engagement, where I'm giving advice, I'm giving insights. Okay, so these are 2 types of engagements, and in this example we are talking about the assurance engagement. And when you perform an audit on the implementations of the payable policy, when you perform an audit on the implementation of IFRS 17 or IFRS 9, all of these are assurance engagements. Okay, findings or what? Deviations. You have 2 components: significance and prioritization. Okay. So in the final communication, you will identify the finding, how significant it is, and what's the rating of the finding, critical, high, medium, low, and the prioritization of it, how soon it should be implemented. Scope limitations. What do we mean by scope limitations? Anyone? What do we mean by scope limitation, you ladies? Come on, we are in part 3. I think you should have covered this.
It's a resource restriction when the internal auditor is unable to perform his work because of scope limitation, resource limitation.
Excellent. That's one. Excellent. That's one. But there's another scope limitation. Remind me, where do you work, Aya? In what industry? No need to mention the company. That's fine.
Gas and oil.
Gas and oil. Gas and oil. Let's say, and you're in Lebanon, right? Let's say
yes.
Aya works in the gas and oil in one of the major distributors of gas in Lebanon, and she's the internal auditor. Okay, and she went to one of the stations, okay, to check if everything is going fine, for example, or to perform a cash count in this location, in this store. The guy in there welcomes Aya. Hi, how are you? I hope everything is fine. My name is Aya Hamoud. I'm the internal auditor of this company, and I want to perform a cash count. Okay, no, I will not let you do it. I am the internal auditor. I'm appointed by the board. I report to the board. I need to do it. No, I will not do it. I don't know you. I will not do it. You will talk to his manager. His manager will talk to him, and he will not do it for whatever reason. I'm just giving an example for the sake of the example. This is a scope limitation. Another example. I used to work in a banking industry. Let's say I go to a branch. I wait until the branch manager arrives. Hello, my name is Mahmoud Islambouli. I want to perform an audit on your branch. Sorry, we cannot welcome you today. We are busy. You will tell me this will not happen. No, believe me, sometimes it happens. And that's scope limitation. Another simple term of scope limitation is what? You perform an audit on the payable department and you ask them for documentation. And they didn't provide the documentation. Or they delayed the delivery of the documentation. That's another form of scope limitation. Clear? Understood?
Yes.
Thank you. Inas, May, are you with me?
Yes.
Okay, great.
Yeah, all clear.
Great. So we explained scope limitation. Type a conclusion regarding the effectiveness of GRC. Let's wait. What is GRC? Mahmoud, please. What's GRC? It's governance, risk, and control. Okay? It's another way of saying how well is management effective in governing this process, addressing the risk related to this process, and the controls on these risks. Okay, so in your conclusion, you might include like a point about the effectiveness of the governance of the risks and control on the process being audited. Okay, that's another component. So, yeah. Just to, that's the point that we were talking, Aya, earlier. When we talk about scope limitations, okay? The first one is what? Resource constraints, which is what? Staff shortage. Aya put a plan, Aya is the head of an audit of a company, and she put a plan to what? To perform audits on a subsidiary that's outside Lebanon. But she does not have enough money. There's no budget for the internal audit department. So she cannot perform an audit on this subsidiary because there will be ticket cost, hotel accommodation, maybe per diem, travel cost. There's no budget. So that's another source of what? Resource constraints. Scope limitation, but related to resource constraints. Staff shortage, you put a plan to perform an audit on 10 departments, but the board did not approve your expanded plan to hire 2 more auditors. They told me, we don't want to hire more auditors, you have to do with what you have. So you have another scope limitation, which is what related to staff. That's one. But stakeholders request, there might be, yes, the stakeholders sometimes try to request special scopes to be audited. For example, in the payable, they might request that you expand your period to cover more than 6 months. Okay, you might think if you expand your period will add value or it will not add value, and how will this impact your timeline. 2, exclusion requests. For example, for what, let's say they didn't document or they didn't file the payments for the month of June, they will ask you, please, if you can do from January to May. That's another scope limitation, exclusion request. Okay. The facility access, we explained it. You want to go to perform an audit on the branch, but they don't welcome you. personal access. You want to talk to the chief accountant or to a senior accountant, they don't let you talk to him, because as internal auditors, we should have what? Full and unlimited access to all facilities and what? Personnel. You cannot, no one can tell you cannot do anything. You have unlimited restriction. The other type of scope limitation is what? Access restriction. You wanted access to the system, they didn't provide you access. We don't want. That's another scope. Now later on we will see how we deal with a scope limitation, but now we're explaining the different types of scope limitation. Deadline pressures. And I'll mention to you one of the scope limitations that I faced in my construction during my construction industry career. We traveled to Dubai to perform one of our audits, and it was a planned audit. So the board knew about it, the GM, everyone. We were surprised to know that during our audit, the external auditor arrived to audit the same company, and also the chief accountant traveled, or the CFO traveled to Dubai to perform a control over the same company. In this case, the team in the accounting team in this company, they cannot handle all the pressure. They will have to deal with the external auditor request, the internal auditor request, and the CFO. So this created what? Some of the pressure on our deadline. Okay, you should finish early. That's time constraint. That's engagement length. We were traveling. We had limited time. If we can't finish, what can we do? So these are types of scope limitations. Okay, clear? Difficult?
Clear.
Thank you. Yeah, one last slide and we'll take a break. Okay. Now we explained what the different type of scope limitations. What should we do? How do we deal with scope limitation? First of all, we have to identify the scope limitation. We had a scope limitation of different types that we covered in the previous slide. Okay. The first thing that we should do is what? Discuss it with management. Discuss it with the head of the department that you're auditing. We have scope limitation. This cannot be done. We are auditors. We have unlimited restrictions, unlimited access. So, can the resolution be achieved? Did we reach an agreement on the scope limitation? If yes, that's excellent. But we should disclose it in the final communication. We should disclose it where? In the audit report, that we had a scope limitation, but we communicated it with management and it was resolved. Okay? Type. If we did not reach any agreement, you want to perform an audit on the accounting department, the CFO will not let you do it. And he's powerful, he's political, and he will not let you go into his department. What should you do? You will report it to the board. You will address the board and you will tell them, I have a scope limitation and I cannot perform my audit. And in addition to that, you should disclose it in your communication that there was a disagreement. You elevate it to the board, and then after you elevated it to the board, the disagreement was resolved and it was mentioned in your final communication. Okay? Everything clear? Anything difficult? Anything not understood so far? Before we take the break, I need to hear from you, all of you ladies, please.
Yes, clear.
Okay, so in other words, if we leave today, will you be able to solve the multiple choice for D1 and D2 completely?